Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thanks very much for joining us. Coming up on the show today, Barry Schwartz, President and CIO of Baskin Wealth Management, is our guest co-host. And Jonah Madanik, Managing Partner of Forum Ventures, will be here to tell us why they are betting on Toronto. That's in 30 minutes. And also, of course, we want to hear from you this morning on First Call. You can reach us with your questions on North American large caps. We'll have Barry answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. And our email address is firstcall@bellmedia.ca. Now, here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump is saying that Venezuela will send up to 50 million barrels of oil to the U.S. at the current market price. This would cost about 2.8 billion U.S. Trump adds the sale will benefit both countries. This comes as a blow to China, previously a top buyer of Venezuelan oil. Venezuela has a backlog of unshipped crude piling up since the U.S. blockade of sanctioned oil tankers was announced last month. Toronto home sales fell 0.4% month over month in December, capping a year of lower buyer interest as a result of trade tensions with the U.S. The benchmark price of a home fell 0.7% month over month. Annually, total sales plunged by more than 11%. Buyers failed to return to the market despite lower interest rates and more listings. New listings jumped 5.5% month over month in December. Warner Brothers says an amended takeover offer from Paramount is inferior to the deal it already has, or it's been offered by Netflix. The entertainment company is urging its shareholders not to tender their shares to Paramount. Warner Brothers also says it has doubts Paramount will be able to close the deal. The media company adds the amount of debt financing and other terms put out by Paramount heighten the risk of failure to close the deal. And now our top line story. All eyes, of course, are on U.S. President Donald Trump's foreign policy today, from Venezuela to Greenland. Lots of things are going on right now. Let's break it all down with the latest in the developing Donroe Doctrine, as they're calling it, and its impact on the markets. And joining us now, our guest co-host, Barry Schwartz, President and CIO of Baskin Wealth Management. Barry, thanks as always for joining us.
Thanks for having me, Roger.
I know this is the week. We could say Happy New Year this week because we haven't seen each other.
Happy New Year to everybody, and all the best for 26.
You had good holidays?
Very, very nice. Actually, it was on vacation not too far from Venezuela. Lucky I got home.
Yeah, so we were talking about that. A few people were down there thinking we could have been trapped because they're in places like Aruba, Bonaire, things like that.
Well, Donald called me and told me, don't worry, Barry, you'll get home fine.
Okay, So let's talk about your buddy Donald and get your thoughts on what is unfolding right now. We'll start with Venezuela.
Well, none of this stuff, if you've been paying attention to what he's been saying since 2019, none of this stuff is new news, right? He's mentioned since 2019 that the U.S. should get Greenland. By the way, if you study history, this is not the first time the U.S. has talked about trying to buy Greenland or annex Greenland, but the Dutch obviously haven't acquiesced.
Danish.
Danish, yes. Sorry. So the bottom line is we have to take him now at his word, right? The tariffs, that was insane. Starting out with 80 or 90% tariffs, no one thought that was actually going to be going through, but it's happened. Venezuela's come true, and now next with Greenland and who knows, Canada and China, right? So, yeah, the U.S. is, I understand the U.S. standpoint. They're extremely worried about Russia and Chinese pressure and the mounting, military powers that those countries have, and the closeness. And this is, as you said, the Donroe Doctrine. Try and get the Western Hemisphere back into hands of the United States.
U.S. influence.
Yep.
And the interesting thing with Greenland, there are options where the U.S. could acquire Greenland. I mean, perfectly legal ways they could do it. It would take some voting. It would take some approval from Denmark and from Greenland itself, of course. Yeah. But there are ways that we could do it. But it also raises questions about Canada's north, because one of the big things is that Northwest Passage, and Canada maintains we own it. Yeah. And a lot of the rest of the world says, oh, no, that's an international waterway.
Well, if you look at the U.S. and say, well, what they're doing is crazy, hello, you got other countries like China and Russia doing things that are also crazy and trying to protect their own people and whatever they're doing. So, I mean, this is the world we're in right now, right? There's always worries that China's going to invade and take over Taiwan again. We still have this Russia-Ukraine war going on. Russia's not backing down. So, the United States feels the world has gotten more dangerous and it needs to protect itself. So I can understand why it's doing it. Is it doing it in the right way? Who knows?
All right. And what about and Venezuela a little bit, the oil there? Is this as a big a deal? It's a big deal, but is it as big a deal as some people are thinking it is?
It is a very, very big deal. Venezuela, obviously, we don't know 100% for sure if they have all the oil reserves.
Yeah, I think that's the big question. I was looking at some of the numbers.
So OPEC, of course, Venezuela is part of OPEC. OPEC is a self-reporting organization, so there's really no idea how much reserves we have. Whereas in Canada, with the oil sands, Suncor, CNQ, Cenovus, these are all regulated companies. Their proven reserves have to be pretty good versus who knows what's going on with Venezuela. But it is a big deal, obviously. There's a significant amount of reserves there. Greenland, of course, there could be a ton of minerals, who knows. But, there's no infrastructure there. There's no railroads. There's no roads in the countryside. So good luck trying to build that out. I think it's probably more for strategic purposes than getting the minerals.
Out, but I imagine there is some value to it. I think in Venezuela also has been called mineral rich, but again, it may be the same situation. Trying to access it. But we have that issue here in Canada.
Well,
the Ring of Fire.
Listen, you have the players, Russia and China, getting closer relationships with the Latin and Central American countries, and this is not what the United States wants to protect its people.
Yeah, and especially, the Monroe Doctrine goes back, 100 years? 1918, late 1890s, that they were going to say, they told Europe, keep your hands off the Western Hemisphere, and it still stands out.
It's just we woke up on January to a more dangerous world than we've ever had.
And so, where do you see this going with the oil, with oil companies within Venezuela?
Well, I don't know what's going to happen with Venezuela. Obviously,
there's a lot of
someone's got to go in there and take a look at the infrastructure. Can they really produce 3 billion barrels of oil? Is it 3 million or 3 million? 3 million barrels of oil per day. Is that really doable? Can they really ship all this stuff to the United States and have it refined? God only knows. Is the reserves actually there? Is it economic? With oil at $56, we know the Canadian oil sands are very profitable at $55 oil, make a ton of money. But they've spent so much money on technology and operations. And you've got some of the best operators in Canada operating the oil sands, whereas the United States, Venezuela, a lot of the oil sands has been sitting there.
And the reliability, too, with
exactly.
Canada, right? You know you're going to get your oil every day.
But the bottom line for us is we think CNQ and Suncor should be worth so much more because you have the flowing oil, you have the infrastructure, you have the technology, you have the security and the safety of those assets. I don't understand why the market knocked it down. To me, they should have been saying, holy smokes, if this is what the world really wants, they want oil. Hello, we've got some of the best companies, we've got tons of reserves. All we need is infrastructure to start getting it to other countries, right? Then that's hopefully what the Canadian government will start doing.
And that's the other big question for it, right? Is this the impetus for the government to push on this, even with the pushback from David Eby in BC? Is this the impetus where they say, no, we're going through with this?
I sure should hope so, and I think hopefully that 2026 people have woken up to a different world.
Okay, all right, we'll see what happens with it. Coming up next, we'll take a look at the markets before the bell. Let's see how things are looking on the markets right now. We'll start with the U.S. futures. A bit mixed right now, but all of them are sitting at near or record highs. You can see the Dow is pushing 50,000 right now. Heading over to Asia. And down day across the board there. Some concerns about overheating. The Nikkei off by more than 1%. Hang Seng by nearly 1%. And the CSI 300 off by 0.29%. Off to Europe now, and mostly flat, a little up a little bit, down a little bit, depending on where you are. The FTSE still over 10,000, up 0.63%. The CAC Caron, it's down, but still above 10,000. Let me phrase that properly for you. The CAC Caron is pretty much a wash right now, and the DAX is up 0.63%. And the TSX continues its New Year's rally, the third day for it, a record high. Basic materials, especially gold-linked names, leading the way, closing at 32,407, up 0.58%. So who were some of the winners and losers yesterday? There you go. First Majestic Silver, Endeavour Silver. First Majestic up more than 10%, Endeavour by 8.4 almost. Enerflex going the other way, down 4.1. Bombardier down by 4.28%. And looking at the metals, you can see they're all off for today. Silver was back up over 80. Now it's down almost 4.7%. Gold off by 1 1/4. Copper as well is down a little more than 2%, but still all hovering record territory. And Western Canadian Select taking a hit yesterday, off more than 3%. Now weakened slightly, mainly by the widening of its discount to WTI. And you can see it's at 43.05. As for WTI, it is down again today. It was actually below 57 a little while ago, but it's off 0.16%, 57.04. Well, in a letter to shareholders this morning, Warner Brothers Discovery determined that an amended takeover offer from Paramount Skydance is inferior to the deal it already has in place with Netflix, and urged its shareholders not to tender their shares to the interloper. For more on the story, let's bring in our guest co-host, Barry Schwartz, President and CIO of Baskin Wealth Management. Is Paramount being serious about this, or are they just trying to shake things up a little bit?
It looks like they're very serious. We are Netflix shareholders, by the way, very unhappy with the performance of Netflix stock. It hurt us ending.
We can talk about that in a second.
Yeah. But absolutely, they're serious, right? So the Ellison family, as you know, has already acquired Paramount, and Larry Ellison with his stake in Oracle. These guys have a lot of money. They've rounded up, of course, lots of investors around the globe to try and help out with this purchase. These are amazing assets, and if it goes in the hands of Netflix, the game is over. So I understand what Paramount is trying to do, but their offer is inadequate, and obviously Warner Brothers has concerns about how much debt Paramount is going to have if it closes this acquisition. Paramount has also made very expensive deals to acquire UFC and other content. So that's also hurt its balance sheet. And I just don't know how if you logically think about it, how can you compete up against Netflix? How is that even going to be possible? Is Paramount going to even be able to sign up?
If they lose this deal, yeah.
If they win this deal, I still think Netflix is the ultimate winner, whether Netflix acquires the Warner Brother assets today or acquires the Warner Brother assets by a bankruptcy through Paramount 3 to 5 years from now.
Really? You think that might happen?
It could happen, right? Because Netflix is the gorilla. It's won the war. It's generating so much cash flow. It's going to have a monster fourth quarter, by the way. It's the new Stranger Things, a Jake Paul fight, some other new content. So we're very excited to be Netflix shareholders. I understand why the market is concerned. These mega deals in the past have not worked out. Remember the Time Warner AOL deal for old fogies like us? I'll call myself, I'm not going to call you a fogey. But the bottom line is we think Netflix should be the winner here in this deal. We don't want Netflix to raise its bid. If Warner Brothers Paramount is serious about getting this asset, it's going to have to raise its bid to $33 or $34, all in cash. And I still don't know if that's going to go through.
And I just found it interesting, some of the comments from Warner. And now I know this is in the middle of negotiating, but the board said the proposal continues to impose restrictions on Warner Brothers' ability to operate before a deal closes, such as a limit on entering into technology infrastructure contracts valued at more than $30 million a year. And why put all these restrictions for another 12 to 18 months, assuming this is the case, when you want a healthy company when you're going to take it over?
Yeah, that does make a lot of sense. And of course, we have to worry about regulatory approval, right? So there's going to be a lot. We've already had the White House weigh in, but of course the FCC and antitrust, the DOJ will have to investigate any deal, and who knows if it's even going to be approved, whether it's Netflix acquiring it or Paramount.
And with Netflix, just talking a little bit about it, what's it down? It was down.
Yeah, well, stock actually had a fine year. I think it started at about $80+ and the year $90.
Okay.
But it was $130 a share in midsummer, right? So it's down about 30%. And it's not because of the fundamental results, because the results have been terrific. This is a company growing at top line at double digit, and now the PE ratio, forward PE ratio, is below 30.
Okay.
So that doesn't. I mean, that's a great bargain, right? Even if the deal doesn't go through, you're getting a great asset here at a really reasonable valuation. If the deal goes through, then you're getting probably some of the best content in the world. As we know, Warner Brothers has DC and Harry Potter and Game of Thrones. That's really good IP, especially in the world of AI slop that we're seeing, right?
What is driving people away, or what has people afraid?
I have no idea. I think maybe people are worried that Netflix will overpay. Maybe Netflix will come back with more dilution for shareholders. Maybe they're worried that this deal won't go through and everybody's wasting their time. But the valuation has become divorced from the fundamentals of Netflix. You can't find it. It's near impossible to find a company growing top line at double digits with such tailwinds to growth, with a balance sheet like it has, at this kind of valuation. We're buying Netflix hand over fist for our clients.
And what are the tailwinds? What are the ones you like about it? The tailwinds.
Well, Netflix is going to continue, in our opinion, to win. Theatrical movie watching.
Yep.
At home. Will continue to acquire more content. It will get more into video games. And there's still, there's only a few 100 million subscribers of Netflix right now. There's billions of people subscribing and watching TV and content around the world. So there's still more opportunities, higher prices to charge, other services. God only knows, right? And Netflix still really hasn't got into sports yet, right? Started a little bit with NFL, wrestling, if you can call that sports, UFC.
I used to.
I thought it was real until my friend Anthony Berger told me at 9 years old it was fake. So the bottom line is Netflix is, in our opinion, is a really attractive opportunity here.
No, okay, we're going to wrap it up there. But coming up next, we'll be back with Barry to see what stocks on the TSX are on his radar. Time to see what's on the radar for Barry Schwartz, President and CIO of Baskin Wealth Management. And Barry, you've got your eye on the TSX and some of the high-valued names on the exchange. Let's talk a little bit more about that. Aritzia, we'll go in alphabetical order because you sent them to us, I think, in alphabetical order.
So I'm not here to say that these are bad companies or, I wish I owned them all because they've done tremendous, right? I'm jealous. But I'm just not sure I would buy them right now. I don't like investing in Aritzia as a fashion company, a clothing company. There's so many clothing companies that were hot as anything, and then eventually,
Well, we were just talking about Adidas getting double downgraded.
Nike, Lululemon.
Nike's situation.
Yeah, remember Lululemon knew everything, and everybody was buying their clothes, and then of course it got oversaturated, and that was the end of the story. Aritzia still in its infancy. Somewhat in the growth story because there's still so much potential in the United States, but trends change so quickly. And so, this is a very volatile business. If you look at the stock, last year, unbelievable, but it's had a number of tough issues, even in the most recent past. Too much inventory, missed a few trends. The stock was a top performer, I think, in 2023, and then a bad performer in 24. So, fashion is volatile, and I sure am not going to pay 40 times earnings for a fashion company.
And any indicators, changes that would maybe change your mind?
No, I'm never going to buy fashion. Absolutely. It's just I stay away from that. I will stick to limited luxury companies where they have limited supply. But what always happens with these companies, they grow so fast, they do terrific, and then they get saturated, and they're not cool anymore.
Okay, would you buy a train or a jet or a snowmobile from Bombardier?
Well, Bombardier is in the private jet business, and aerospace is so hot right now. We've all been on airplanes recently, and I wish I had so much money that I could have my own private jet. Right? It's terrible.
Yeah, count cars.
Bottom line for Bombardier, it's just trading at a very high multiple now for its growth. This was a stock that everybody was concerned was going to be nailed by the tariffs in 2025. Kudos to the management team. They have a huge backlog. Everything's working in its favor. But you're paying a high multiple for this business that is really much a boom and bust business. And if you know the history of Bombardier, things don't always go so smoothly in this business. So I think it should deserve to trade at a lower multiple before I got interested in buying in the stock.
Okay, Cameco.
Same thing, right? The future is all bright for uranium. We need more power. We need more data centers. Natural gas can't cut it. I totally get the story. But paying, I think it's looked recently 50 times forward earnings. So that's a lot of money to pay for the future, which is unknown. We don't know what exactly how many power plants are going to build, how long it's going to take, how much is going to be demanded, where other supply is going to come from. I think it's a good, clean story, but I just think the valuation right now is just a little too high for my taste.
You don't think with the energy demand?
No, the energy, it's clear. The tailwinds are clear for the energy demand, but, anything can happen. Maybe the U.S. Takes over all of Venezuela. They got a lot of natural gas, too, right? Yep. So maybe that's used as a source to power plants. God only knows.
All right. We're going out of order here. Shopify now.
Shopify, unbelievable success story. If you didn't own it last year, you look pretty dumb. It's done nothing but go straight up. But it's trading at a most magnificent valuation compared to some of the Magnificent Seven stocks. Is it growing faster? Yes. But should you pay 90 times earnings? You can buy NVIDIA at under 30 times earnings. You can buy Amazon at under 30 times earnings. Great businesses with long tailwinds, inevitable companies. Is Shopify as inevitable as some of these other Magnificent Sevens? Hard to know. But love the business, think it's terrific. Management's done a great job, but I'm not sure it's worth 90 times earnings. And any pullback could be pretty nasty for shareholders here.
Okay, Dollarama.
Dollarama, it sounds like I'm jealous here. I wish I'm so stupid and never bought the stock. But at 40 times,
can't buy everything.
Yeah, can't buy it. At 40 times earnings for Dollarama, which has reached growth limit in Canada, it's now doing risky stuff, in my opinion, to try and get growth. Investing in Central America, made an acquisition, in Mexico, Central America, made an acquisition in Australia of dollar stores. Maybe this will work out, maybe it won't. But, the company's now quite levered. The valuation is very high for a growth story that I think is slowing down.
Okay, we'll wrap it up there. But stick around. Still ahead, a U.S.-based venture capital firm is betting on Toronto's tech scene, and our phone lines will open soon for our first call segment. You can reach us at 1-855-326-6266. Also, send us an email if you're shy. First call, bellmedia.ca. U.S. President Donald Trump is saying Venezuela will send up to 50 million barrels of oil to the States. At the current market price, this would cost about $2.8 billion U.S. Trump adds the sale will benefit both countries. This comes as a blow to China, previously a top buyer of Venezuelan oil. The origin of the oil was not mentioned. However, Venezuela has a backlog of unshipped crude piling up since the U.S. blockade of sanctioned oil tankers was announced last month. Bloomberg is reporting that the chat platform Discord has confidentially filed for an initial public offering. The American chat application is popular with gamers and programmers and reported 200 million monthly users in December. The report says deliberations are ongoing and the company could decide not to proceed with a listing. Warner Brothers says an amended takeover offer from Paramount is inferior to the deal it is working on with Netflix, the entertainment company urging its shareholders not to tender their shares to Paramount. Warner Brothers also says it has doubts Paramount will be able to close the deal. The media company adds the amount of debt, financing, and other terms put out by Paramount heighten the risk of failure to close the deal. And a quick peek at the markets. Very mixed right now, you can see. The Dow still hovering near 50,000, but up ever so slightly. And the NASDAQ off slightly, and the S&P 500 pretty much a wash, but it's been a good start to 2026. Earlier, Danish Parliamentary Deputy Speaker Lars Christian Brask spoke with Bloomberg's Francine Lacqua on the pulse about U.S. President Donald Trump's recent comments about acquiring Greenland as a national security priority. Take a listen.
We have to take it seriously when it's the president of the U.S. that speaks. But that said, I also think some common sense must be applied. We've been a partner with the U.S. For more than 80 years. We have helped them in Afghanistan and in Iraq. And actually, I think the Danish military lost most soldiers per population of any in those wars, helping the U.S. The U.S. is a partner, it's an ally, and you don't go blue on blue. One NATO country doesn't go and require territory of another NATO country. It's unheard of and it's disrespectful.
I mean, your government has requested a meeting with Marco Rubio. What do you hope to achieve?
As our foreign minister has said and also told us yesterday, the foreign minister of Greenland and the Danish foreign minister have requested a meeting with Rubio, and there we will get facts right. Some higher-ranking U.S. personnel has said that there's 30,000 people on Greenland. There's 57,000. U.S. has had 17 bases in Greenland, and not many years ago we spoke to the administration and I think actually the president as well, and asked what do you need? Do you need more? Do we need to keep the infrastructure going? What is needed for the U.S.? And there was no demand for extra bases at that time. So sort of to clear out some of the misunderstandings, also that Greenland is surrounded by Chinese and Russian ships, etc., etc. And the opportunities that are there for the U.S. In terms of bases and rare earth or rare minerals.
There was an emergency meeting in the Foreign Policy Committee yesterday. What was the outcome of that meeting?
It is totally secret what is discussed in that meeting, and sometimes the agenda is not even public. But the agenda that was public, or part of the agenda yesterday, was the discussions about the relationship to the U.S. And the outcome of that, or at least what is official from that meeting, is that our foreign minister, the Danish foreign minister, and the Greenlandic foreign minister will go or have requested a meeting with Rubio in Washington, D.C.
Sir, are people nervous in the government? Is it nervousness? Are you emboldened? Like, what's the kind of mood music? Do you think there's any possibility of a deal on anything being struck with the U.S.?
Well, people are nervous. We haven't experienced this before, and certainly not from an ally. So, of course, there's uncertainty, nervousness, to some extent anger. But will there be found a resolution? I hope so. And it will start with a meeting with the two foreign ministers and Rubio in Washington, D.C.
What do you think NATO should do or say now? It's been a little bit silent so far.
Yeah, we've had lots of support from leaders of states and like Nordic Council that I'm chairman of for the Danish part has also come out with statements basically saying this is not on. But we haven't heard much, as you say, from NATO. Mark Rutte could come out with a statement basically saying how it works and how it certainly doesn't work in NATO in terms of acquiring, in inverted brackets, land from each other.
Do you think that would focus the minds, or is there a danger that it escalates?
I think dialogue always helps. I think Churchill said, "Speak jaw to jaw. It's better than war," or something to that extent. Dialogue is always the way forward to de-escalate situations and to clear uncertainties and misunderstandings.
Mr. Bresk, I've had a number of viewers trying to comment and email saying, like, why is there not a referendum in Greenland about who they want to belong to? And what do you say to that?
Well, at the end of the day, Greenland decides on the future of Greenland. Greenland can decide that they want to be part of the U.S. or they want to continue to be part of Kingdom of Denmark. And I think in that is also the problem, because when Greenland very clearly announced that they wanted to be totally independent at one point. Then somebody woke up in Washington, D.C. and said, wow, that's a big threat to our geopolitical situation. This big landmass run by, populated by 57,000 people, we have to look into that. So I think the key thing for Greenland to do is to decide, we want to stay within Kingdom of Denmark. We might modernize how we work together, or an alternative route, and then we'll look at that when that potentially can be on the table.
Mr. Bresk, I know there's so much uncertainty out there at the moment, but in terms of timeline, how do you expect events to go? How quickly do you think, we would get something from either a statement from NATO and then that meeting with Marco Rubio and things quieten down? Or how critical are the next 2 weeks?
Oh, the next 2 weeks, they're critical. But let's get the meeting with the three foreign ministers together, clear up the misunderstandings, try to understand what it is everybody wants to achieve. And then I'm sure we are more informed and there's less misinformation after that meeting.
And that was Danish Parliamentary Deputy Speaker Lars Christian Brask. And let's bring our guest co-host in, Barry, back in. Barry Schwartz. Oh, we're going to actually hang on. We're going to a break, sorry. And then we'll bring back. Barry was so excited over there. He's like, I'm going to get back in. Okay. Still ahead, we'll continue to look at how Canadian oil markets are being affected by the recent headlines. And our phone lines are open. Barry is going to be taking your questions on North American large caps. Call us at 1-855-326-6266 or email firstcall@bellmedia.ca. Shockwaves from the dramatic U.S. capture of Venezuelan President Nicolas Maduro continue to impact Canadian oil markets. For more on this, let's bring our guest co-host Barry Schwartz back in. He's the president and CIO of Baskin Wealth Management. Barry, we saw the reaction on Monday with the Canadian markets. Oil companies dropped.
Yes.
They bounced back a little bit, but I think people are realizing, hang on, this is a long-term issue. We have time to start figuring things out.
We do. We don't know if the Eglinton LRT will be finished before we can get more barrels out of oil out of Venezuela, right? So hard to know.
That's a Toronto joke.
Yeah,
for
Toronto
everyone.
joke. Sorry. Hard to know how fast things happen. But,
Yeah.
Okay, let's look at the players in Canada. So obviously Venezuela has, we don't know how much reserves they have, but they have
100
huge
billion,
reserves
maybe 300 billion, depending on
oil sands type assets that Canada has. So very similar, right? And so one would think that to build that out, to get it going, to build out refineries, to handle the capacity, probably going to take a long time. Mm-hmm. In the meantime, of course, you have Canadian oil still flowing to the United States. What does it mean in the short term? Obviously, the short-term reaction is the right reaction. Sure, the Canadian oil stocks should go down. You've thrown a new uncertainty into the wrench, and it may have consequential issues medium and long term, right? Mm-hmm. If there's a huge supply of oil coming from another country and it's close and the U.S. can reduce its reliance on Canada, and that's what it wants to do, then that's great. Obviously, oil is a fungible product, right? If you don't if U.S. doesn't buy it, someone else is going to buy our oil eventually, right? And so,
hopefully, although it depends on what the future is.
It depends, but if you look at all the prognosticators, they're saying oil demand increases every single year by almost a million barrels per year, right? And so if Venezuela is producing 1.5 million barrels and it goes up to 3 million barrels in 2 to 3 years, that's not going to be enough to cover the world demand, right? So what should you do as a Canadian investor? I only own Canadian oil and gas stocks for the income. Here's the thing. I don't own them as growth companies because I've settled on owning the generalist type investments in oil and gas, like CNQ or the Suncors or the Tourmalines. I own them because I'm going to get years and years of income from them, and they're the best-in-class operators. The wonderful thing about CNQ is it's been able to keep its production costs so low, less than inflation. It's incredible given how expensive things have gotten. One of the things, of course, is natural gas prices. The inputs have come down. But CNQ has the ability to double its production in a very quick period of time. But we just don't have the infrastructure. We don't have the buyers yet. So, chicken and the egg type crisis. But I think as a shareholder of CNQ, I can own this stock for a very long period of time and get a rising flow of dividends, something that's totally not related to what I own in the rest of the portfolio. I'm getting best-in-class management. I'm getting long life reserves. It seems that the world really, wants to fight over oil. We have it all here in Canada. So, I'm very excited to continue to own these companies. But it's not like I'm owning it hoping it's going to double in a year from now, right? The
nice
price
and
of
solid.
The price of gold can do anything, but oil price is obviously.
Are you not worried about the impact this could have on those companies, or at least short term, probably no, but longer term?
Longer term, it's an issue, for sure. How do you solve that issue? Well, you have to find new buyers for our oil. You have to start building out the infrastructure. But
we're not really seeing the infrastructure being built out.
No.
And are there buyers? Will there be buyers for us, do you think? We have to have a port. We have to have a pipeline.
But you have the demand from Asia and India and all these countries that are continuing to grow, and the world demand for oil continues to increase. And we know we're going to be building lots of new data centers and commercial buildings and what have you, and the economy is still growing. So there's a lot of good things happening for oil demand.
Okay, we'll wrap it up there, Barry. Thanks as always, though. And still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including on AST Spacemobile. Let's take a look at some of the notable analyst calls and recommendations. First up, AST Spacemobile. Spacemobile is more fun to say. Shares fell 5.9% pre-market after Scotiabank analyst Andres Coelho cut the recommendation on the satellite broadband company to sector underperform from sector perform, writing that it faces an uphill battle given the leadership position of Elon Musk's Starlink. The price target was set to $45.60 US, implying a 53% decrease from the last price. I still think they should go with Spacemobile. Deckers Outdoors shares are down 3.9% in pre-market trading after Piper Sandler downgraded the footwear retailer to underweight from neutral. The stock has risen 35% off a November low, but analyst Anna Andreeva wrote, "We worry about promotions as an unhealthy customer acquisition tool and potential direct-to-consumer wholesale conflict as a result." Price target is set to 85 from 100 US. When we come back, Barry Schwartz will take your questions on First Call. All right, time now for First Call, first email, and it's from Michelle. Good morning. Could I please have Barry's opinion on HPS? Is it a solid stock to buy at this level? Is it a long-term hold? Barry.
So HPS is Hammond Power. Hammond Power provides utilities and data centers with all the stuff it needs to be electrified, so to speak, right? And Obviously, with the build out of data centers and everybody talking about the electrification of the grid, the stock has done tremendous. But, there's always worries. Is there going to be new technology introduced? So yesterday, for example, NVIDIA said it has a new chip that needs less power, right?
And doesn't need chillers.
Exactly. So, and the stocks, some of the HVAC stocks took a big hit. So you're really playing the second derivative here on data centers. I'd rather not. I'd rather just own a company where there's tailwinds for a long-term growth instead of betting on a short-term boom-bust type scenario. Because obviously it's over-earning today. This is not the real demand for its products over the long term. It's just a big rush of orders. So but that could continue for quite a while. I'd rather own a company like Taiwan Semiconductor or Amazon or Microsoft, or if I'm going to bet on AI,
where the demand is more continuous with it. Okay. Next up, we got an email from Yasmin. Good morning, Roger and Barry. Your thoughts on Canadian utilities, please. Thanks so much.
I think they're referring obviously to the Canadian utility stock, not Canadian utilities in
general.
But
the lights are on. That's good.
Yeah, I mean these are going to be good companies in the sense of there's nothing else to buy with your money for safe income, right?
Yeah.
So with interest rates coming down in Canada, with GICs below 3%, with high interest savings at 2%. After fees, taxes, and inflation, there's no return. So I understand why the dividend-paying stocks have done well. You got a regulated business here. You got obviously some tailwinds to electrification. But these are not the most wonderful high return on invested capital companies. You own them only for the income. And if you believe that interest rates are going to continue to stay low for a long period of time, then you probably want to, if you're an income sinker, you probably want to have more of these in your portfolio versus GICs or bonds.
It sounds like a good foundation, good basic foundation.
For sure.
Any concerns of headwinds for it, though?
Well, these are companies that are very levered. We can have an economic recession. We can have the government saying you're not allowed to build that. We've seen with TransCanada and some other companies where they built all these new pipelines and power plants that cost overruns, and then they don't earn the IRRs, the returns that they thought they were going to earn. But these are not risky companies per se.
Yeah. Okay. Next up, we have an email from Craig, and TRI has pulled back nicely. Would you be a buyer here? And if so, is a purchase at today's level better done all now or in increments, with the assumption we are not at the bottom?
Yeah, so TRI, Thomson Reuters, of course, is a seller of proprietary data for accounting, for law, for health. If you're a lawyer, you subscribe to Westlaw. There's nothing else you would pay for. Whether they like it or not is another story. But obviously, the world's changing fast. People with AI may be able to use alternative sources. And of course, this is not unique to Thomson Reuters. You've seen all software service companies,
lots of questions
that sell proprietary data. Their stocks have not done well recently. And so I don't know the future. All I can tell you is these stocks have been beaten up really badly. They're going to have to adapt in this new age, but maybe they've fallen too much. Reuters obviously had a glamour valuation. It was trading at $250 a share, very high. I think it's come off to a very reasonable level. And it still has this amazing proprietary data that maybe even in the age of AI, you still have to pay for. And maybe you'll pay more for AI features that they offer.
Well, and that's the thing, right? How are they going to incorporate AI into their products?
Exactly. And I mean, in the meantime, they're ring fencing all their data, all their information so that it doesn't get out, and you still need to access their accounting, their law stuff.
You have to. Data is always, information is knowledge. Yeah. And so you have to control it and maintain it, right?
Well,
if you're the one creating it, you want to make sure you get compensated for it. Okay, Justin is up next. It says, good morning, Barry and BNN. Could you please share your thoughts on Uber Technologies?
So, I mean, interesting movements with the company. Autonomous vehicles is the new buzzword, right? Yes. Everybody's talking about that in robotics.
And it kind of had like a resurgence.
A resurgence. So, it totally makes sense, right? If you can have a fleet of Teslas without a driver, there's no worries, they run them at lower costs, it would make people feel really good. But the logistics, the CapEx build out, is going to be a fortune. So I think Uber's market position is pretty safe in the short to medium term. I don't think we're going to see many risks from autonomous vehicles. And of course, they'll say that they already have the fleet, they have the technology, they're going to benefit from autonomous vehicles. So we like the stock, we like the company. We haven't pulled the trigger on it because there's a lot of moving parts. It's not as clean a story as we would like. But we are paying attention. We own Google. We obviously hope Google wins in the autonomous vehicle with Waymo. But there's a lot of big, heavy competition here, and you haven't even had Amazon or Apple. They could make investments in this area too.
Now,
So there's risks.
do you think there could be a winner like the automotive industry? We have a bunch of different car makers, or is this one of those ones that may just be one winner?
Uber's already a winner.
They are, but there'll be competition. There's always competition.
Uber is the winner right now, and it's become a verb. It's become an action, and it's life changing for a lot of people. But we'll see what happens as the technology changes.
Okay, and then we got about 30 seconds. This one's from Len. Barry, thank you for taking my email. Your outlook over next year or two for a top tier property REIT like Allied Property, trading at 1/3 MBV.
They did the right thing. They cut the dividend, which was a smart move. You saw the other day Minto going private, right? They're unhappy with the stock price. I'm bullish on Canada long term. Real estate, you have to be very, very patient. I think people will return to offices. I think people.
We're starting to see it now.
Yeah,
right?
We're starting to see it now, or they'll be repurposed. They did the right thing. The stock is now stabilized, and you just have to be patient. If you're a long-term investor, it's probably not the dumbest idea to start acquiring some of these beaten-up real estate companies.
Okay, we're going to wrap it up there, Barry. Always a pleasure. Thank you for joining us. And that is it for us here on The Street. Thanks again to Barry Schwartz, President and CIO of Baskin Wealth Management. And he's up next with the Open, and the markets will open a little more than 30 minutes from now. Have a great day.